The amazing thing is I didn't buy AMC stock waiting on a rule from the NSCC to cause a short squeeze. The short squeeze is going to happen because of the short interest and the fact that they have not covered yet. That's all we really need to focus on. To think that NSCC 2021-005 is going to affect more than 1% of its 4,000 members is just bad due diligence. To think that increasing the required fund deposit from $10,000 to $250,000 is going to affect more than 1% of the 4,000 NSCC members is just more bad due diligence. And to suggest that this rule is going to be the key to causing the short squeeze is just dreaming. The short squeeze is going to happen, but not because of this rule. Let's get into the details. Hey guys, Tony Denaro here, and this is part one of the follow-up, providing a little more background on the video I did yesterday about the clickbait videos people are posting on YouTube regarding some of the regulations that are coming up. And this video is not to discourage anybody, quite the contrary. What you guys need is facts, not fake hype, so that when a date or a rule happens and the squeeze does not happen, you don't get discouraged and get tired of AMC and leave the community. We need you to hold until the squeeze happens, and the squeeze is going to happen by something that nobody expects, not a rule that's being widely misinterpreted by the community. I'm going to throw up a couple of screenshots just so you can see kind of what we're talking about here. NSCC increases margin requirements by 25x, margin call. AMC stock just approved NSCC ruling to margin call hedge funds. And here's another YouTube video, 2,500% margin requirements, margin calls starting, referencing the same tweet in his video. So let's take a look at 2021-05, and I will give you a real quick summary of what it actually does. And as in most of my videos, I'm not going to just link a tweet in the video. I'm going to give you in the video description actual links to the real information. So just in case you don't believe me, you're free to take the time to do the real research yourself. Now, what this rule does do is increase the minimum required fund deposit from $10,000 to $250,000. That's a fact. What almost everyone is missing is that of the 4,000 members in the NSCC, almost all of them have a fund deposit that is vastly higher than $10,000 in place already. The amount of firms that this rule is affecting is probably 1% or less. The smallest of the firms you've never heard of. So if you're counting on this rule to margin call all of the hedge funds, guess what? Most of them have deposits that are in the millions of dollars in place, and this rule does not affect them. That's why when this rule went out for comment, only one comment came in on it. And even the company that commented said it's not going to affect them. And I'll link that in the video description also. As you can see here, each member's required fund deposit consists of a number of applicable components as identified within Procedure XV, Procedure 15. I will also provide a link to Procedure 15 for you. You're not going to want to read it. It's hundreds of pages with a lot of complicated calculations, and it's really not important, but if you want it, it's going to be there for you. Currently, each member is required to maintain a required minimum fund deposit of $10,000. Keywords here being minimum. The proposed rule change increases the minimum required fund deposit to $250,000. Again, keep in mind the keyword here is minimum. This required fund deposit and the margin settling that happens is actually what got Robinhood in trouble during GameStop, where they got an email in the morning with a $1.4 billion margin call to increase their fund deposit for clearing. And there is a real interesting video with Michael Bodson, the CEO of the NSCC, talking about this in front of the House Committee on Financial Services. And I'll put a link to that video in the video description as well. Now, when this rule went out for comment, there was one company, Alpine Securities Corporation, that had their law firm send in a comment letter. And I just want to highlight a couple of things that they said in their letter to show you that even the one company that commented did not care about the regulation. What it says here is, as a small independent clearing broker, Alpine is within the target zone of the proposed rule change, although Alpine is not directly impacted at this time only because NSCC currently requires Alpine to maintain a required fund deposit of over $3 million. $3 million, guys. So for them, the change from $10,000 to $250,000 is nothing. Their current required fund deposit is $3 million. This is a small firm. Larger companies, larger hedge funds have required funds deposits of hundreds of millions of dollars. They don't care about an increase from $10,000 to $250,000. Who cares? A couple of very small firms. So if Alpine doesn't care about the increase from $10,000 to $250,000, why did they even bother to write this letter and comment? It's in the next paragraph. On 2 separate occasions this year, reps from DTCC have informed Alpine that NSCC plans to seek an increase in the minimum capital requirement to $10 million. Now we're talking $10 million. And that the NSCC expects that the change will be implemented in the 4th quarter of this year. See, now we have their attention, and that even has my attention. An increase in the minimum fee to $10 million would be substantial. The final reason that this rule is not going to have the impact that these YouTubers are saying it's going to have also is covered in the Alpine letter, and it goes to the back testing that the NSCC did over a 12-month period from June 3rd, 2019 to May 29th, 2020 to determine the impact of increasing the required fund deposit from $10,000 to $250,000. The NSCC observed during that back testing that if the $250,000 minimum had been in place, 44 deficiencies would have been eliminated by 13 members. 13 members out of 4,000 in the NSCC. The fact that only 13 out of 4,000 members would have been affected over a 12-month period by increasing the required fund deposit to $250,000 tells you all you need to know about how much this is a non-event in terms of forcing a short squeeze or affecting the big, large hedge funds. It does not matter to the big guys. It's all about a couple of corner case small guys and improving the deposits for those companies. So if you stuck around to the very end of this video, I hope you can see a little more clearly that while this rule is helpful to the NSCC, the amount of members that it affects is only a very small fraction, the very tiniest of member firms of the NSCC. That's the facts, and if you like facts, I invite you to buy and hold that subscribe button. Stay tuned for the next video, and I will see you on the next one.
You think that I'm insane, it's your mistake.